Welcome to Big Business This Week. I'm your host, JD Durkin, here on the floor of the New York Stock Exchange. Another big week of big business news, to say the least, with the U.S.-China trade war seeming to be ever evolving as President Trump holds calls with his Chinese counterpart, President Xi Jinping, and the so-called Big Beautiful Bill, that budget reconciliation bill. Well, a lot of questions about if it'll pass, and if it does, its impacts on the economy. Former head of DOGE, Elon Musk, has some opinions, more than some opinions. Here to help us break it all down is Washington Bureau Chief at MarketWatch, Rob Schroeder. Rob, appreciate your perspective. My goodness, as you and I are logging on for this conversation, it's the type of environment where we're actively checking social media because things seem to be changing just that quickly. Before we get into the nuances of the latest of the Elon Musk-Donald Trump divorce, as some are calling it, let me get your perspective for what you're seeing going on in the broader financial markets this week, Rob.
Yeah, JD, and first of all, just wanted to say happy to be with you. It's been quite a week here already, a wild ride, as many are seeing in the financial markets and in Washington, the one influencing the other constantly. You're seeing actually today in the markets, the S&P 500 creeping back towards that 6,000 level. And I think that some of that can be attributed to this phone call that you mentioned between President Trump and President Xi of China. I think when you're talking about these two big economies, it's always better to be talking versus not talking. This call came after there was a slight breakdown or pause, if you like, in talks between these two critical countries. And now the two presidents have spoken. They agreed to speak again, and their economies are obviously very intertwined. So I think that's giving a lift to some sentiments in the market, and that's what we're seeing play out right now.
Jaw is better than war. I believe that's the old phrase, if I'm not mistaken. And we're certainly seeing that front and center between the Trump White House on one side and Beijing on the other. Rob, market volatility had been a huge storyline. You go back to April 2nd, so-called Liberation Day, a mega sell-off that reached just about 20%. And then from those lows in April to where we are now, we've really had an incredible bounce-back story. What do you make of the fact that really, if you look back at the last 16 or 17 trading sessions, we're in this very narrow range. We are very close to our February 19th all-time highs, but it seems to be, at least on the equity side, a market that's looking for answers, looking for clarity, and not entirely sure whether it's willing to make a big leg move up or a big leg move down.
Yeah, I think that's a great summary, JD. I mean, you've seen certainly when the tariffs go on, the market goes down. When the tariffs come off, or at least when they're paused, the market then tends to then rise, at least for a while, before leveling off. But as you say, there has been a sort of searching for firmer ground. I think we did get a bit of that today, or we may be poised to go a little bit higher here in the next few sessions, at least while the U.S. and China are talking. Really, this is the biggest bilateral relationship, I think, that we've got here, that the markets have. Tremendous amount, obviously, of bilateral trade between these two countries. And anytime that they can seem to be resolving their differences or pledging to resolve their differences, I think that that'll give some support, certainly to equities. And I think that's what you're seeing today. All three indexes are in the green. So President Trump and President Xi certainly are aware of these dynamics there in New York, and certainly in China as well, with China's economy dependent on the outcome of these talks. So each of them has quite an interest, as do all the investors who are watching your show. So we're certainly going to be watching this for more signs of concrete progress and the next talks, whenever they may be.
Rob, at least when you and I are having this conversation right now, we are seeing the 10-year at about 4.39. It's up 3 basis points on the day. What have you noticed in terms of how Treasury yields have been moving, in particular, in light of this, what the president calls his one big beautiful bill? We know it better as a budget reconciliation bill. This is the one bite of the apple that congressional Republicans are going to get, and they're trying to throw everything and the kitchen sink into this one bill. And I'm sure there's more than a few concerns for the so-called bond vigilante crowd out there about what that means for the state of debt and deficit.
Yeah, absolutely. And one of the main concerns here, and one of the things that everybody in the markets and in Washington is going to keep, an eagle eye on, is the ultimate cost of this. You have the Congressional Budget Office saying that it could add, trillions to the deficit over 10 years as the way they score it or the way they analyze it. And you had congressional Republicans, Senate Republicans in particular, yesterday meeting with President Trump at the White House to discuss how can we save more from this bill should we pass it. Now, you have senators like Ron Johnson of Wisconsin, Rand Paul of Kentucky, and some others who have raised the alarm, who've really sounded the alarm about this and what it does to the deficit. You don't want interest rates going up if you're the White House, if you're the consumer, if you're a politician in Washington looking to get elected. The last thing you need is for your constituents to pay higher mortgage rates, higher car loan rates, higher payments on just about anything, and worries that the U.S. As someone who sells debt, who sells those bonds, starts to look unattractive because of the growth of debt. So there's tremendous concern about this, and you're going to see a lot of efforts to shrink the impact on the deficit. Whether those will be successful or not, we'll see.
Yeah, we certainly will. We'll get a little bit more into the DOGE Elon Musk factor in all this in just a bit, and there's no shortage of drama and fireworks there to discuss. To stay with the relationship between U.S. and China, I wonder, are there sectors or particular parts of the economy or the markets you think may be disproportionately affected than others as we look forward to what hopefully, in terms of the eyes of Wall Street and I think people everywhere, is a little bit of easing of the ongoing trade tensions between U.S. and China?
I think really the key thing, besides certain sectors, because the two countries are so intertwined, there's a tremendous amount of back and forth between each other. Really, one of the key things here to watch is what China does with what's called rare earth elements, rare earth minerals, and so on. These are things that are used in a wide variety of products by American automobile manufacturers, defense, your iPhone, and so on. And China is not letting these be exported as easily as the U.S. would like. And that is somewhat of a bargaining chip for them. Of course, China wants the sanctions to come off, the tariffs to come off. So President Trump mentioned this in his post on Truth Social today, discussing rare earths, and this has been known to be a thorn in the side. So if China would let some of those rare earths come out of China, of the country, that would go a long way towards solving these tensions. And really, I think you see what happens when, to all sectors, the S&P 500, currently it's up 7 points, the Dow's up 109 points as we speak here. You see the market lift on any positive news. So I think it cuts broadly across a wide variety of sectors. But that rare earth, that metal trade, really is the key right now to solving these differences.
I wonder, Rob, what you're tracking with regards to how U.S. companies and domestic businesses are adapting their supply chains in response to the evolution of trade policies. Obviously, that first quarter GDP print really stuck out in negative territory, and I think part of the popular narrative there is because so many companies here in the U.S. had to aggressively expedite imports in an effort to try and get ahead of the worst of the tariff tit for tat. And so that sort of threw our balance between imports and exports out. It's not really that clear that that same kind of negative print for GDP is going to hold for Q2. In fact, it may very much be whiplash to the opposite. But what have you seen on that regard and how domestic companies are trying to adapt? And what is that impact on overall GDP that you'll be tracking for the current quarter?
Yeah, absolutely. I mean, one thing that we track very closely here, obviously, is the impact of those tariffs. And you hit the nail on the head. If you're managing a supply chain, it must be extremely difficult because one day the tariffs are on, one day the tariffs are off. Now, we're in the midst of a 90-day pause in the so-called reciprocal tariffs. So those right now are giving, I think, a little bit more, rather the pause is giving a little bit more certainty to managers as they look at the future and what to order and so on. But for a while there, yes, there was quite a bit of uncertainty about what to do. And so the hope is that the next GDP, the next economic growth reading, will be a little higher because we get a little more certainty. And just to go back to China for a moment, this kind of forward progress that we're seeing after this call between the two leaders ought to give at least some hope or some optimism about planning for the future among businesses and among economists who are penciling in those estimates for how much the U.S. could grow this year. Stock markets are about even on the year. They're in positive territory, but just slightly because, again, the tariffs. They've been going up and down. So they certainly are directly related to what's happening with the tariffs. And now, perhaps there could be a little more certainty now that the U.S. and China are on track and talking again and plan to talk more.
I would love to get your perspective here on the Elon Musk component about all this, because a couple of weeks ago at that Qatar Economic Forum, the world's wealthiest man made a very big pointed moment to make it clear he plans to suspend his political spending overall. He seemed to indicate somewhat quietly in those comments some frustration with lawmakers in Washington, and as if there was ever doubt, he then took it much further in the days and weeks since, making his frustration, Rob, with the president personally very clear in many posts on social media today, and with congressional Republicans. And I wonder how you see that relationship. Do you view it as a temporary deterioration? Do you view it as something more substantive? And even if Elon Musk has not always been a stout political figure, his money, his influence, what he brought to largely GOP causes for the 2024 election was huge, Rob. I don't know that you could really discount his single-handed, outsized, disproportionate impact, arguably on the outcome of the election. And yet many of those same candidates Elon Musk helped support, they are now firmly in his crosshairs because he is so firmly against a massive bloated budget reconciliation bill that now from the CBO has a new price tag of north of $2 trillion.
Absolutely. I think you can't discount, or you can't talk enough about Musk's impact on political spending and what it means for the next round. I mean, we're only looking at midterms here coming up next year. Next year is not too far away. And as you know, politicians need to raise money all the time. He did say that he would be pulling back a little bit, but he argued today on Twitter, I think on X, that Trump would have lost the election without Musk's support. So this has the potential to be quite damaging for candidates that otherwise may have had Musk's support. And the how should we say it? The relationship, let's call it, between President Trump and Mr. Musk is you can see it falling apart really in real time. It's an extraordinary thing to watch because you have Musk tweeting as the president is talking, literally in the Oval Office about the mega bill, or as it's called officially, the One Big Beautiful Bill Act. Now, Musk says that he doesn't like the overall spending, but I think there's more here than meets the eye, because there are a number of incentives in there or not in there that impact Tesla, his automobile company, directly. For example, they're trying to, in the bill, take away some of these clean energy provisions, and one of them is the EV tax credit. So that is a big benefit, obviously, to anyone who would buy an EV, who would buy a Tesla. So I think that's some reason for him to be upset. And there are many more, but it's a remarkable thing to watch this relationship fall apart, as I said, almost really in real time.
Are you surprised, Rob? Because I think I was kind of in the chorus around the time of the election of a lot of people who said, I have a hard time imagining that Elon Musk and Donald Trump have a permanent, big, beautiful relationship, so to speak. Like at some point, you just kind of had a feeling that whether it was, the two giants in the room together, at some point there would be some fracturing. I just don't know that people expected it to come quite so quickly.
Mm-hmm. Yeah, I think Musk was in the administration for, a decent amount of time. It's the beginning of June here. He did serve his time as a special government employee. But I think, as you say, you have these two big personalities with big ambitions and big goals. And whether it's him and Trump, or whether it's another pair of individuals, men or women, I think there's some rooms are only big enough for one person. Some towns are only big enough for one person. So they don't have to be at cross purposes, certainly, but it's pretty remarkable to see this fallout happen. And one has to wonder, well, what would it take, much like the U.S. and China, for this to get back on track? Would it take Trump and Musk speaking again? Would it take them redoing the mega bill in Congress, and so on? Both Trump and Musk have been known to change their minds. I remember during the first Trump administration, Musk quit one of Trump's advisory boards over a move that Trump made. Then he was back, of course, in this round. So these things can go in a circular nature. When the next turn of that screw might be, it's hard to say. But for now, certainly they are sort of getting a divorce, you could say.
I'm glad you mentioned those early advisory councils because, I was a Trump White House reporter, Rob, as you know, the first go-round, and it's sort of this interesting chapter from Trump 1.0 that I think a lot of people forget, which was that in 2017, there were various economic business advisory councils, the idea being influential leaders across government, across policy, across private enterprise, Wall Street, could have regular meetings with President Donald Trump, fashioning himself as a business-thinking president. And they very quickly disbanded due to various controversies. And I think there were some leaders, Elon Musk one. Tim Cook is another one who really comes to mind to me as the ultimate CEO who played the game with Donald Trump. And I would argue other CEOs have tried to emulate their current relationship with Trump 2.0, much in the same way that Tim Cook successfully did Trump 1.0, which was to have Apple successfully, for the most part, avoid the worst of the tariff disputes between Beijing and the Trump White House. Are there any learned lessons that an Elon Musk, you think, or any other business leader should be taking, either from how things went the first time Trump was in office, or you have business leaders looking at what's going on right now between Elon Musk and the president and saying to themselves, I really don't want to be in that category. I would like myself, and more so my company, to stay in the good graces of President Donald Trump?
I think the key thing for American businesses right now is to read President Trump's lips, so to speak, and pay attention to what he's saying about where to produce things, where to make things. The president wants to make things in the United States. He wants to shift production domestically. Some companies are indeed investing more in the U.S. The White House will certainly provide a long list of those companies that have made investments domestically, build factories, make other investments, and so on. But I think really, JD, the question here is in 2025, in a multinational economy, in a multilateral economy, how realistic is that? I don't know that Apple, for example, which is a globalized company and does a lot of production overseas, as many companies do, is Apple really able to make 100% or 90% or even 50% of its products domestically? I don't know that that's the case. I'm sure that people smarter than I am can answer that or game that question out. But right now, I think what the president wants and his administration want to see is more domestic manufacturing, more domestic production, and the like. And that, if companies are looking to get in his good graces for one reason or another, putting aside the question of whether that makes economic sense for them, that's probably what is music to his ears, or what would be music to his ears. But once again, from a business standpoint, those companies are going to do what makes the most sense for their bottom line, for their shareholders, and so on. So I don't know that a relationship like that is meant to be, because companies are always going to make those decisions that are going to make them the most money, and not necessarily what is best for them in the, let's call it, the political sense.
One thing I think is safe to say, I don't believe the president likes to be accused of, quote, such ingratitude, the way that Elon Musk just did earlier today on his social media platform. So we will certainly have to wait and see how that story plays itself out. Rob, I am about out of time, but I'd like to conclude by asking you, what is one big story in the overall markets, the space of the economy that you're following, that you think we should be paying a little bit more attention to?
Yeah, absolutely. I think two things, JD. The question of interest rates, what the Federal Reserve is going to do next. Is there going to be a change in Fed policy given what is going on right now with all the uncertainty in the economy? And number two, just how trade goes. The president and his team say that they have deals that are in the works, and what is going to happen with all these tariffs. We put together a tariff tracker at MarketWatch by one of my colleagues just to help our readers get a sense of what has been put on, what could be coming, and the like. And given the impact that both of these things have on markets, those are really what we're laser focused on right now.
That's a great perspective. I'm really grateful for your time, Rob. I could sit here and do this interview with you for well over an hour. Unfortunately, my friend, that's all the time we have. I'm really grateful to your time and much needed context and perspective to help us make sense of a very busy news week. And if we wait 5 more minutes, the storylines will change. That's the world we're living in. Rob Schroeder is the Washington Bureau Chief at MarketWatch. Rob, thanks a lot for being here with us today.
My pleasure, JD. Thank you.